This episode is for aspiring VCs who are walking the most unconventional paths into VC. You went from being at a place in your life where you could only worry about survival, and yet you were able to transition into success. Joe, welcome to the podcast.
Thanks for having me.
What was the first time you even knew venture capital existed? Was it when you really started studying the rules of finance in community college?
So I kind of knew I had heard of the term. I didn't really know what it actually meant, really until I had actually gotten my first internship on the way to ultimately becoming an investment banker. I did an internship at a small fund here in New York that was focused on fintech. And I kind of always thought that venture meant that you had to be super technical. And then I did this fintech internship and I was like, oh, you have to be really, really technical. So, uh, yeah, that was my original foray into it. And I actually left thinking that I was never, ever, ever going to be back. Yet here we are.
From that beginning of really just knowing about venture capital from your internship, what was that journey on when you just like realized, hey, let's actually make that jump into VC? Was it like a light bulb moment or was it like a particular long journey?
Yeah, so to get some clarity on that, it's actually really helpful to kind of understand where I came from. So because BC really is kind of the natural culmination of everything that I've done up to this point, and starting my own fund is really represents the next chapter. I didn't go to college right after high school. When I did, I was in and out of community college a whole bunch of you know. I didn't really know what I was doing. I didn't know why I was doing it. Eventually, I decided to go back to school. I had gotten this crazy idea that I wanted to be an investment banker and went back to school with the singular goal of breaking into investment banking. And, I got to Columbia, went off to Lazard where I did M&A in the aerospace and defense group. And also I spent some time in interactive media and technology focus group. But I also ran this program called Wall Street After Community College, where I would help young kids in community college figure out how to get their dream internships and then dream jobs in investment banking and even discover, what those careers really are. And I discovered, in myself that actually what I really loved doing was finding that underappreciated talent and helping them succeed. And I got pretty darn good at figuring out how to get kids out of community college and into investment banking jobs. And I was like, you know what? This skill could be way better used doing something totally different. Uh, but really, at the end of the day, it's actually just the same. In venture capital, what I'm looking for is I'm looking for those undervalued, overlooked, mispriced gems that I can pick up and really help them achieve their potential.
It seems like you actually have a really good eye for people as well, where it's like, obviously when you're helping kids, even no matter what college they are, obviously like intelligence is literally the same over colleges on average. But when you actually pick people, it's like who is actually gonna put the work in, right? It's not like you just like mentor them and then just like give them a role or just like introduce them into a role into investment banking or anything like that. It's like you mentor them and say like, hey, you have to do this and this and this, and then they actually have to do that. And when those people actually do that, then they would get this amazing role and they're going to become amazingly successful, just like how you've helped them. But it sounds like you actually had the eye for talent as well, which is pretty darn amazing. So, you mentioned that you went back to school, but you started at community college. You went back to school to Columbia. Did you have like a personality shift, or just like really matured really quickly, and just like decided to sit down and then study the rules to play the game of life, or what was that process that really made that change and propelled your transition?
Yeah, I think the best way to describe it would probably be just a shift in maturity. Like a lot of young men, I kind of, it took me a while to grow up, and I went really through high school leaning into the things that I loved. which were, I love my history class. I love playing soccer. I love hanging out with friends. I like girls. And really not leaning into the things that I couldn't stand, which was most of my math classes, science, just generally doing homework, worrying about standardized tests, all that kind of stuff. Um, so I kind of felt, at the end of high school, I was like, wow, like where do I go? What do I do? I didn't really feel like I had a sense of purpose, and I went to community college because well, you got to do something, right? Or so I thought. And it wasn't until I took a few years off, and I was working, I was washing cars, there were no cars around a car, before, really realizing, like, hey, you know what? There is a little something to that education thing. And honestly, I wouldn't change it for the world. I think that going back to school, after taking a few years off, is one of the best things that's ever happened to me.
It's just like so hard to do that, where it's like, obviously everyone should just like live freely. And when they're young, even in high school, college, actually maybe most people in their lives, they don't really mature to an extent where they actually start to do things that they love. They kind of just like follow what society wants for them, or just have like a direction in life chosen by society. But it sounds like you really just like made that transition, you really matured, and then you found like a path for yourself. So what was it behind the scenes? Like, you were working, and then were you studying? Like how were you doing like all the studying and also all like the reading of finance and stuff like that? Like what was it behind the scenes during this maturity while you're also working at the same time?
Yeah, I mean, so behind the scenes, it really started with a second job that I got. I got a second job. It was off of Craigslist. I was an office assistant at a small, boutique investment firm, and I just it started really with curiosity. I got in there, I saw a bunch of people. It seemed like they were super smart. It seemed like they were working really hard. It seemed like they all were having a lot of fun doing it. And I just immersed myself in the culture. But it wasn't just because I was inside the walls. It's so easy to pick up a copy of the Wall Street Journal, right? It's so easy to turn on CNBC. And, I just started consuming absolutely everything that I could consume. So I think it really starts with curiosity more so than a lucky break. I think it's just a sense of wanting to learn and wanting to learn. You when you don't understand anything at all, you need to look everything up. You got to figure everything out, and you know I just kind of went down that rabbit hole after rabbit hole after rabbit hole after rabbit hole after rabbit hole until I got completely intoxicated with this idea that I was going to land myself in a finance role, a front office role somewhere. And in my infinite naivete, I was already going around telling people like, "Hey, I'm going to be an investment banker. Like when I grow up, I'm going to get into IB." And people would be like, "Dude, you failed out of community college. Like you are grown up. You don't get to do those things anymore." And I just refuse to take no for an answer. So I think curiosity, and just kind of a relentlessness to desire. I think that really describes the behind the scenes.
Yeah, and it's like people, even if they're put in like a job of like an investment firm or anything like that, like people wouldn't just like take all the resources that they have, like all the documents, all the strategies, like people would not just go back to the back office, take the boxes of records, files and stuff and just like really look through that, dig through that. And you really found like resources, but not only that, but when you found those resources, you're like, okay, I can learn from this resource to be more well versed in the financial world, and then you just kept doing it because VC is really one of the top qualities is that you have to keep learning, or you will not keep up with the industry. So, could you talk about what are some qualities that you should not go into VC for?
Reasons not to go into VC: you should not go into VC if you think that if you're going to get rich. You should not go into VC if you think that it's going to be easy. You should not go into VC if you think that it sounds cool to be an investor, but you don't actually really know what that means. I think that VC is not really a career that you should, necessarily aspire to be in if you don't already have. um, some sort of experience or some sort of real desire to be in it outside of just thinking that it sounds awesome or thinking that it sounds cool. It is not, it's not, this isn't a lifestyle career, right? Like I'm a former investment banker. It's, this is just as hard, if not harder. When you're doing it the right way, it is a very, very, very hard career. Uh, it's rewarding, but it's also challenging. This is not a 9 to 5 gig. Uh, so I think that, venture is something that you should learn a lot about. And if it makes sense, one way or another, you'll find your way into it. You'll fall into it. Um, but it's not something you should just try out. It should be kind of a foregone conclusion.
Yeah. And you're like a master of really unconventional paths. Could you talk about like, the most unconventional paths you've seen that, maybe your colleagues or other VCs that you have seen that broke into VC?
At the risk of sounding trite, a lot of people tell me that I am the most unconventional path that they have ever seen. Um, you know, I think that there's people have had there's so many different ways to get into VC, and one of the things that I will say is like everybody hears these stories about like guys in the '80s, boomers, and they're like, oh yeah, I went down to the office and I sat there in the lobby with my resume and I just refused to leave until they gave me a job, and you're like, okay, that's impossible. Like you can't do that anymore. You get arrested, you get thrown out, and like that's mostly true. I think with VC though, one of the things that's interesting about it, and where there is an element of opportunity, is in that exact same idea that like you can be a blogger, you can be a LinkedIn shit poster, you can be a whatever. Like if you can start doing the job before you actually have the job, and if you provide value to somebody and you become indispensable to somebody, next thing you know, you might just kind of wake up and be a VC. So I think I think that there is still a little bit of a Wild West attitude to it, right? There's a little bit of a anybody can do it opportunity in this space. So I would not hesitate to, if you really are passionate and interested in getting into VC, figure out a way to add value to an investor's life and make yourself indispensable to them. Uh, that does not mean, you know, hounding them, asking them for a job. That means sending them valuable information. And if they're like, oh, wow, where did you get that? Or why did you think about it this way? Or any chance you could put that together for me on this industry or this company or this founder or whatever. Find ways to provide them with value and find alpha. All they want to do as an investment manager, they want alpha. Do not give them beta, give them alpha. And if you don't know the difference between those two, probably figure that out before saying that you want to be an investor.
Yeah, for our audience, what Joe is really saying is that in VC, you have to add value first, which basically means that, you should really just like, even right now, just start acting like a VC, like do what they do, really connect with founders, meet with other VCs, literally just hear people's stories because people love telling stories to each other, especially like the founders. They always love to boost about their startups. So really add value first. And how do you do that? Like VCs don't want you to just like come in and then they teach you everything. Like that's not what they want to have you for. And they don't hire you for that. They hire you for, for example, let's say, just like Joe says, if you gave like a portfolio company and then somehow they invested in that portfolio company, then bam, like that's value right there because it shows that you have the investor eye. Or maybe, you are good with LP relationships and you can just like bring in the money, then that's like even better because all venture firms they just like love um people who knows how to raise money, and that's like one of the biggest categories as well. Um, so you mentioned that you've actually been really in the finance role, and then somehow in the finance world, VC just kind of found you. Like how did you even like start your firm? Like did you just like at a party or an event you just like got together with a bunch of your colleagues right now, and then just like, hey, let's start a VC firm?
Yeah, so the way that we started it, I'm one of the co-founders and general partners at Daring Ventures, pre-seed fund investing in software that augments human capability. Um, the way that we started it, it's myself and my co-founder, Maddie Holman. We were two friends. We had met in Los Angeles when I was running Wall Street after community college, my kind of nonprofit-esque, mentorship program for community college students. I was always looking for other people who I could have join my mentorship network, specifically other women who were on the buy side. I knew plenty of women in IB, a handful in PE, and I knew that some existed in VC and hedge funds. I just never met any of them. And I met Maddie at a networking event and we became fast friends. We both had non-traditional paths into venture. And we decided, just to keep in touch, I would, send mentees over to her, we'd chat, et cetera, et cetera. And, it was the right time, right place for both of us to take that next step in our career. And the thing that we both really, really loved was that idea of finding overlooked, ignored talent and helping nurture it to grow and really help people achieve great things. And we just kind of sat on that idea, started spinning it around, and decided like, hey, you know what? We could start investing around this strategy. So we did the same thing that we just tell founders to do, which is go out and do some research, right? Find out what your customers want. When you're running a venture fund, your customers are your LPs, limited partners. They're the ones who they hire you, right? They give you the money to invest. So we went out and talked to them. We're like, okay, like track record, people want to see prior investment performance. Sure. Those things, table stakes. What else are you looking for? What we actually found out is they're looking for something different. They're looking for a manager who differentiates themselves. They're looking for somebody who understands operational risk. There are too many people who are aspiring VCs who are, running their fund, so to speak, out of their Gmail inbox. So we decided that we were going to make an investment in building the operations of the firm, like building up a sourcing funnel, right? Getting our website going, getting branding, doing all of the things that we needed to do to show people that we were doing the job every single day, coming into the office, doing the job every single day, so that once we did end up raising capital, that we were a turnkey operation and we could just continue to do the exact same thing that we were doing before. We were making investments, that were just a little bit smaller than they would be from the fund, and just finding deals, doing full diligence, deploying capital, supporting portfolio companies. The exact same thing if you want to break into venture that I recommend that you do. Go out and just do the job. Do the job before you have the job and just figure it out. So, and there's a lot of things that go into building a venture fund. Everything from fund formation, how you're going to structure your sourcing pipelines, what diligence looks like, how you're going to build your data room for fundraising, how you're going to think about where you go for fundraising, who you're going to raise funds from. You're not going to fund one. You're not walking into an endowment or a foundation and raising capital from that. It's just not going to happen. That's just not how it goes. You need to pick and choose those battles. There's so much that goes into starting a fund before you ever raise a dollar and before you ever even deploy a dollar into a fund.
Yeah, it sounds like you really had to really just like put that work in, even though you weren't guaranteed like any money from the LPs. It was just like you did all this work, and there's just like even a chance where no LPs are gonna invest, or just like way too little LPs are just gonna put too little money in, and then there's just like nothing, and then it's just gonna be all failed, and just like a whole year, because this is like not just like a few months of work. This is like maybe even years of work in behind the scenes, and it's just like crazy how much work you have to put in. So if you don't actually have that track record of that grit, that tenacity, and one of the things that we actually talked about was like, hey, like the 100 to 300 million funds that are generalists, they are going to have a way harder time, because LPs are really looking for differentiation, and they're really looking for what really make this venture fund different. And you guys actually have a really cool website. Like, I personally think that that is like the coolest, most unique website I've literally seen in every single VC fund possible. But yeah, I mean, our audience members, you should definitely check it out for sure. And you also mentioned like when you were younger, it was like you met your colleagues right now through networking events. Could you talk about like mentorship, as in like, did you have mentors along the way? And even starting the fund, like, did you have a mentor to guide you through this process?
Yeah, I think one of the things that often gets lost in the conversation about mentorship, and I've been on the receiving end of some really incredible mentorship, and I've also been fortunate enough to have a handful of people consider me as a mentor. The thing is, with mentorship, it's much more like having a thought partner and having a business partner who's willing to discuss, strategies for handling your life. Somebody who's a little bit more, they've seen a little bit more than you. They have a little bit of a different perspective. Mentors don't tell you what to do. They don't. They help you evaluate the choices that you're going to make. I know when I'm having a conversation with somebody, if they're asking me like, okay, well, what should I do? They've already lost the battle, right? That is not going to be a good fit for me. It starts when they come to me and say, hey, I have these two choices. This is the reason why I'm leaning this direction. This is the reason why I'm leaning that direction. For example, people will come and talk to me, often about investment banking recruiting, right? How they should think about transferring from community college to a four-year school. If they come to me and they're like, I want to be a banker when I grow up, tell me what to do. I'll tell them, take a hike, go back, go to Wall Street Oasis, go to Reddit, come back to me when you've got a zillion questions, right? The way that those conversations usually go is like, okay, these are the five schools that I've applied to, right? Some of these are private, some of these are public. How do you think, some of these are liberal arts, some of these have a dedicated finance program. I know somebody who's in the club here, I know somebody who's in this club there. This is what my internship experience is, and I'm leaning towards these two schools because of X, Y, or Z. But do you think that I should be considering, perhaps applying to another school because of this other reason? The reason why I don't want to apply to that other school is because, I'm worried about the cost, or I don't want to be that far away from my family. But at the same time, I'm also trying to be realistic about the fact that, breaking into banking is very hard and I need all of the different, advantages I can get. How do you think about or how would you think about evaluating that? That is how mentorship works, right? Then I'm helping relay back to that individual, like, okay, you're asking all the right questions here, right? One of the things that I would encourage you to do is do not underestimate how much stress you're going to be under and how important it is going to be close to your family. So if that's going to be something that's really important to you, maybe put a little extra weight on that. At the same time, there's nothing more stressful than financial stress. So remember not to get yourself into too much debt, to go to these other schools. Like if you can go to you're in California and you get into UCLA, you just go to UCLA. You're not going to get into a markedly better school, somewhere else if that's where you're from. But don't take on a whole bunch of debt to go to you know, out of state to go to Emory because you think it's going to be easier to recruit for banking in Atlanta. Like we kind of work from all of that information, but it starts with them coming prepared and needing specific guidance.
Did you have like any mentors, like as in like for your fund?
For the fund specifically, we leaned on a lot of people who, we knew had experience, not just in starting funds, but in starting businesses in general. People who had been investors, people who had started their own businesses, started their own startups. And, really at the end of the day, a fund is just a business. That's all it really is. It's just a business. And everybody said the exact same thing, which was step number one, like figure out what your customer wants, right? If you believe that you can do it, then fine, you can do it. Like, go and figure out what your customer wants. And no one's going to come down from the clouds and knight you and tell you you're ready to be an entrepreneur. No entrepreneur has ever felt ready. It's only in hindsight where they're like, oh yeah, I was probably ready. But at the same time, they're like, I had no clue what I was doing. The Howard Marks, the legendary investor from Oaktree, says he tells a lot of entrepreneurs the best time to start a business was 40 years ago. And that's why we decided to start our business when we decided to start it. And, 40, well, we can't start 40 years ago. Well, we started it 40 minutes ago. That turned into 40, hours ago. That turned into 40 days ago, and then so on and so forth and so forth. Like, might as well just get started. I mean, so I think those are, um, I think we leaned on a lot of people who are not like fund or finance level mentors and people who are just like mentors in our life. People who are, we had started our careers under, friends and, family members, friends, dads, uncles, cousins, stuff, everyone around us who we trust, to get us that real kind of life advice. And everybody was like, if you feel like you can do it, you can do it. Just do it. Like that's step number one. You just got to go try.
Yeah, and for our audience, this is like a really, really valuable lesson, whether you're a mentor or a mentee right now, even if you're managing people or you're an intern or anything like that. This is a really, really valuable lesson because if you think about it, when you're mentoring someone, if someone just like comes to you and say like, "Hey, what do I do? What do I do?" without like actually doing the research, actually doing their plan, then it's just gonna be like, "Hey, I don't know if you're even gonna do this." So, if someone came to me with like no plans, no research, I'm just gonna say like, hey, do these steps first and then come back to me, just like Joe says. And then afterwards, let's say they want to do something, then they're gonna have to tell me their options first, their answers, or what they're thinking about choosing about because of their research. And then I'm gonna guide them because that really shows that they've actually done their work, they've actually done their research, and these are actually the best people to really invest your time with because they're gonna show that they have done the work and they're gonna do the work in the future, which basically means that they're definitely gonna become successful people. So could you talk about how do you find these mentors? Like, where would you find them? Is it just like through your um, through your network? How do you find these really good mentors?
I think the best part of finding a good mentor the biggest part of finding a good mentor is finding somebody who you resonate with, somebody who understands you, somebody who speaks to you, in a way that, in a way that resonates with you in a way that you really understand. I think that, one of the biggest things that people forget about mentorship is it's not something that happens transactional, right? You don't ask somebody to be your mentor. You develop a relationship around mentorship with somebody by having a healthy give and take with them around you know, around advice, around listening to them, around kind of, trusting them to be a guide for you about asking their opinion. Um, and I think that too many people think that mentors are something that can be bought and sold, right? That it's just a way that you connect with people, transactionally. And I think mentorship, it's it's a lot like it's a lot like what people say about love. Like sometimes it just comes around when you're least expecting it, right? It's just one of those things you should be open minded about where it's going to come from. Um, and I think the other thing to remember about mentorship is it really is give and take. You have to be willing to give, and that means listening, that means being punctual, that means not taking up too much of their time, and those relationships will form naturally. I think that's probably the biggest thing that I can say about mentorship.
Yeah, and I agree. It's like mentorship is really, it could be as simple as listening and actually doing the work that your mentor advises you to. And, that's at the end of the day what the mentor wants. And if you actually add even more value to their business or to their daily life, then that's a stronger bond right there. Talking about daily life, what is a day in your investment life or a week?
Yeah, I think one of the things that's the most fun about kind of doing this job now is every day is different. It could start with, meetings internally. It could start with talking to a founder. It could start with going to a coffee event. Um, writing articles for my Substack. It could be, doing diligence on an investment. It could be fundraising, uh, building. We were working for a long time on, building our own bespoke operating model for fund construction or for like portfolio construction, I guess you could say. Um, it really can be anything and everything. My favorite thing to do is talk to founders, but that's not the job, in and of itself. When you're a general partner and a co-founder of a firm, you have to wear a lot of different hats, and I think that is, one of the things that I enjoy about this the most. Every day is a challenge. It really, really is a challenge.
Yeah, and it's like some people say like VC firms are not startups, but they really are. And I bet some VCs would be glad to hear that you say like, hey, VC firms are a business because they really are, because they really are just a service business where they're catering to their stakeholders, which is the LPs, and also to the founders, which is in their portfolio, and they're gonna have to just like come 24/7. If a founder calls, they're gonna have to be there to support the portfolio and really just like stuff like that. For a partner VC looking at deals every day, what are the top three things you look for in a startup when you're considering whether or not to invest?
The top things that we really look for are, first of all, what is the founder's relationship to the problem? We really believe in founder market fit. We think that's extremely important. Um, we don't just look at the founder, we look at the entire team. We evaluate kind of how everybody is connected to the problem and whether they, are able to play their position. And that doesn't mean that your entire team needs to be connected to the issue. It just means that, you know, like for example, I don't know, you're building something in ag tech. Like, don't tell me that that your CTO is like a former farm founder because they planted a few carrot seeds one time. Like, it's okay if they don't have founder market fit there. It's like, just be transparent and you know be upfront. So we look for founder market fit. We look for soft characteristics. How do they handle conflict? Are they willing and open to take advice? How do they push back? Do they stand up for what they believe in? Um, do they just roll over? We're not testing. It's never a test. I'm never like sneakily trying to get people or anything like that. But those things come out in conversation. But most importantly, and it's the reason why I saved it for last, the biggest thing that I look for when I evaluate a company is, what is the founder's relationship with adversity? Because there are a lot of people who, probably not people listening to this podcast, because they don't need to learn how to break into VC because it's been handed to them. But there are a lot of people who have never really heard no in their life, and they've never really experienced failure in their life. You know, uh, Exeter said no to them, but Deerfield said yes. Harvard said no to them, but Yale said yes. Goldman said no, but Morgan Stanley said yes. HBS said no, but Wharton said yes. And so on and so forth and so on and so forth. And then they have a startup, whatever, they go out there, and then Mr. Market punches them in the face because capitalism does not actually care. It really just doesn't. Customers don't give a crap where you went to school, et cetera, et cetera, et cetera. Like, you can raise $1 billion based on that, but what are you going to do when your back is up against the wall? What is going to happen when you hear no? Now, I look for founders who have a strong relationship or understanding of adversity. What makes them tough? What makes them gritty? What makes them resilient? What makes them somebody that I can trust to do not the right thing, because I like, but to do the smart thing when their back is up against the wall? Or are they going to fold, blame it on market timing, blame it on COVID, blame it on interest rates, blame it on this, that, or the other thing, and then say, well, we'll try again next time? We have a very, very, very important job as investors, which is we need to be good stewards of our LPs' money, right? Um, so yeah, number one thing for us, make sure that we understand the founder's relationship to adversity.
Yeah, and it's really centered around the founder because it's like most of the time where it's the business and startup really fails because the co-founders have like an internal conflict. And it's not like it fails because some external conflict happened, but um, it's really really around the people, and the people is what you invest in for VC. Could you talk about, you talk about like we want to choose the most resilient, the people who has been told no tons and tons of times, but they got up again. Like, could you talk about, let's say, I meet a founder in an event, how would I really dissect that? Like, what type of questions would I ask them, and what types of answers would be normally the correct answer to see if they're actually greedy.
Yeah, so there's no real correct answer. And what we try to do is we really try to read between the lines. One of the ways that I get that is like, the founder, they come up to me, they pitch me, whatever. I'm like, okay, great, you're doing SaaS that does X, Y, or Z. But like, all right, I heard the pitch. What are the 5 slides that come before the, like, imagine you're doing a prequel, right? What are the 5 slides that come before the pitch deck? Like, how do we end up here? Like, how did you end up in this grimy bar on a Tuesday, late on a Tuesday night, screaming in my ear over techno about this app? How did we end up here? And it usually elicits like a, well, funny enough, actually, like, I had no idea that I was going to be here. I had no idea I was going to be in New York. I had no idea that I was ever even going to go to college. And then we start having a real conversation about where they come from, what they did, how they got there, and why they decided that they needed to do that. Another question I love asking is like, especially when it is genuinely a hard problem. Like earlier today, I was meeting with 2 founders who are building a new dating app, and I say like, well, that's a really hard thing. That's a really hard problem you chose to solve. Like, you're going up against Match Group. Like, that's a lot of money. Like, why? And I like to see what they say. And the best founders are like, the best founders aren't like, well, they've got it all wrong. The best founders are like, I'm like kind of addicted to doing hard things. Or like, I never back down from a challenge. Or like, my parents are so aggravated with me. Like, I never stop challenging myself. It's like nothing's ever good enough. I just have to keep fighting and fighting and fighting and fighting. It's like, I don't know. I just saw a problem. Like, I gotta solve it. The ones that I can't stand are like, well, actually, like Match Group has a very fundamentally screwed up business model, and we're going to have a lower cost of customer acquisition. X, Y, Z. It's like, like you didn't tell me why you decided to do something hard. You should be answering that question the same way if somebody's like, oh, I'm going to climb Mount Everest. I'm like, why? Why on earth would you do that? That sounds really challenging. It's like, for the love of the game, that's what I'm hoping to get.
Yeah, and for our audience, take this away. Like literally, when you go to events, ask these questions. The first question is, "Hey, why are you even here in this bar? Why are you even here in this event?" And then the second one is, if it's a really hard thing, like, this is such a hard thing. Why are you doing it? And you really want it to trace the answers back to like, I would say like maybe even a trauma, but it's like never backing down, just really resilient and just like tracing back to the journey, 4 or 5 slides back and be like, okay, so you probably failed at this. What did you do? Did you get back up or did you not? Or did you just like give up and then just like went to another thing? Or was it like a respectful, retreat, or something like that? You should definitely talk to founders and get these answers out of them. And heck, there's a lot of VC scout roles out there. So when you actually talk to these founders in the event and you really found like these, I would say like trauma or even just like really resilient people, then just like recommend them to the VCs of that scout role that you have, and bam, you have a great relationship with the VC and also the founder if they decide to invest. Could you talk about, because greedy and never backing down and having said no to so much, that is in a way, there's also like a kind of a trauma aspect to it. Could you talk about like um whether you think like investing in founders with trauma per se is uh I guess great idea.
The way that I would phrase it is I think that there's something to be said for investing in founders who have a resilience mindset rather than an excuse mindset. founders who take a lot of ownership for the things that have happened, or founders who, they're the first to raise their hand and say like, yeah, the last startup idea I worked on, like I just didn't really have the timing right, or I partnered with the wrong person. Not my co-founder screwed me over. I partnered with the wrong person, or I didn't really know what to look for in a technical founder. I made a mistake. A lot of ownership, and not in a trite way, not in a contrived way, like oh it was all my fault. Like just like here's a sober and rational analysis of like this is why it didn't work, and like here I'm going to actively take responsibility for the things that I did wrong. And and I've seen that in founders who the actual reason their business failed was a once in a century pandemic, but they present it to me like, I was leaning really hard into this kind of in-person, business model, and when everything went online, I wasn't quick enough to pivot, or I was just leaning too much on in-person. I didn't think there was going to be a pandemic, and ultimately that was the choice that I made with the business, and that's kind of why it didn't work. Like just a tremendous amount of ownership. I think there's something to be said for investing in founders who take ownership.
And this is actually a general, you know, advice about life too, where if you're actually taking ownership about the stuff that you're doing wrong, then everyone else around you, like they would actually respect you for who you are, even if you made those mistakes. And it's like in VC, just like Joe says, you have to take ownership and you also have to have a positive mindset in a way where, I failed at this and I'm publicly gonna own it that yes, I did fail. Yes, I couldn't pivot in time, and I was just like forced to drop it or anything like that. But actually own it, and then you will have the second step, which is the positive mindset. What are you gonna do now? What is the plan? Are you still gonna have that determination? Are you still gonna do, for example, if it's an ex founder, are you still gonna do your second startup with enthusiasm and knowing that yes, I'm gonna put in the work. Yes, I know like how hard startups are because many people like when they go into startups, like they don't actually know exactly how hard it is, which is like crazy. So when they actually go into it, they just like realize, oh my gosh, like this is so hard. Let's just give up. And for the people who, maybe they give up, but now that they owned it, and then now more than ever, they want to succeed now that they know that this process is like so hard and they want to do it, VCs actually kind of want to invest in them. Um, and could you talk about on the VC side, if you were to hire people, what is the top three qualities that you want?
Authenticity, um, curiosity, and a relentless work ethic. That is those are the number one thing. Those are the top three things, number one, two, and three, that I look for. Um, you have to be authentic. We are just authentic people. We're transparent about what we say. I have a lot of hot takes on LinkedIn, but I would tell, I would say those to people's face. We're very authentic. We're very transparent. We are relentlessly curious. We are just addicted to learning, and we are relentlessly hard workers because this is not supposed to be an easy job. It's fun. Working hard is fun when you're doing something you really enjoy, but it's certainly not supposed to be an easy job.
Yeah, like if you're just like binging podcasts while you're doing like chores or just like cooking in the background, that's the type of person that VCs actually want is that VC is kind of already like a way of life where, obviously it's like long hours. It's like you have to be on call. And if you don't really have the qualities, authentic, grittiness, and really just like want to do this, then you really should not be in VC. Looking ahead, what trends in venture capital are you most excited about? At Daring Ventures, you're investing in founders who are have taken the most unconventional paths. What is really being overlooked in the market or industries right now?
Yeah, I think I think one of the things that I'm really the most excited about actually has to do with the um, real kind of bifurcation of the industry, and it's really a maturation of the industry where some of the mega funds are really, you know, becoming totally different animals. I think a lot of people, see, especially folks who are kind of in the same chair as me, who see, these large funds raising crazy amounts, and these, LPs are, a quote unquote flight to quality, investing in a handful of the biggest managers. I think the LP flight to quality is, you have to remember, career allocators, people who are not investing their own money, they're investing for their career. They're not really investing for, their own return. They're not ones who are taking risks. They just work for a pension fund. They work for an insurance company, somebody who's got a ton of money. Um, and there's an old saying, like, no one got fired for buying IBM. So that flight to quality, I think it's just a flight to kind of reputational quality. And these large funds are increasingly becoming a different asset class, right? They're becoming something more akin to a private market index fund. They're becoming way less like what venture capital is supposed to be, which is a highly non-correlated, illiquid, speculative, diversifying asset that is only appropriate and suitable for kind of the most sophisticated investors, or investors who have a very, high risk tolerance and a long time horizon. And I think this maturation of the industry, where large funds like like Andreessen funds, for example, like those funds are increasingly representing something entirely different. It makes the argument for emerging managers way easier when they're like, oh, why wouldn't I just invest in Andreessen? It's like, I'm not saying that you shouldn't. Just the same way that I'm not saying invest in stocks or bonds, you invest in stocks and bonds, right? It makes the yes and conversation a little bit more compelling. One of the other things I think folks are really ignoring is there's going to be a handful of moonshots that replace humans, right? Everybody wants to. It's a cool idea to replace humans in certain jobs, because, like, think about it. If we could get rid of every lawyer on earth, everybody's margins would go through the roof. It would be awesome. But the reality is that's not usually what happens. And which of those moonshots goes and replaces human beings? That's really hard to tell. We invest where relationships are moats, right? We invest in augmenting human capability. We invest in making, you know, it easier for humans to do the things that they're really good at: sales, relationship building, trust, handling complex issues where there isn't always a right answer, right? We're relying on human trust and human judgment, places where you would never want it to be in the hands of the machine, places where humans are a feature, not a bug, places where friction is helpful, friction is useful, and friction enhances the experience rather than taking away from it, right? So I think that people are forgetting about their spaces. And the last thing that I would say in terms of trends is, the idea that AI and LLMs are going to reshape the way that we interact with software. I think too many people are just baking AI into, or they're saying that it's AI native, whatever, without actually imagining what that really means. What we believe is it's going to change the relationship with software the way that the touchscreen changed our relationship with phones, by making, you know, truly niche vertical software applications more possible, because you're able to create a user interface and user experience that maps onto, the specific need of that software at that specific time. And we think that's going to be revolutionary in niche vertical software. I think too many people are still chasing, really, really, really large markets, rather than thinking about, amalgamating a large group of, niche plays into one platform.
Yeah, and like Joe kind of says, there's still the human touch that is really needed in these industries. And there's just like so much opportunities with the niches that you could actually take advantage of. And especially like right now, there's like Cursor and Replit and Lovable and stuff like that, where these really, really niche stuff, you can literally just like build it right there and then create that MVP. You also mentioned about the model of VC funds. Could you talk about like, for our viewers who is thinking of going into VC in the next 5 years, what is here to stay in the VC model?
Yeah, it's a great question. I mean, I think that the larger funds are going to increasingly act more like just large kind of alternative asset platforms. I always joke around with my team. I was like, if we ever launch a private credit fund, it's time for me to retire. Um, I think that I think that you're going to see companies like Andreessen and like Index and NEA continue to kind of go up market. In pursuit of helping deal with portfolio companies that are basically kind of stagnating, whether that's selling them through M&A or actually turning them into platforms and increasingly kind of doing like a PE style bolt-on strategy. It really remains to be seen. I think we're still in really really early innings of whatever that transformation is, but it is coming. Blackstone, KKR, Carlyle are going to start kind of being mentioned in the same conversation. I believe honestly as funds like Andreessen. So what does that mean for people who are looking to get into the career? I think that means that entry level opportunities outside of kind of the largest funds are going to be very few and far between. I think it's going to be a lot of make your own luck because the places that had two or three kind of entry or early junior, opportunities, the funds that are in that 100 to $500 million range, they're just not. It's just not a sustainable model. It simply does not work. They're too big to provide meaningful alpha and too small to compete with the big dogs. And I think there's going to be a shakeout. But this is the way that things work, right? There's always upstart challengers. There's always companies that get too big. Um, and that's capitalism at the end of the day. So I would encourage. I truly believe venture should not be an early career job. It should be something that you go into later. Investment banking is a great early career job. Consulting is a great early career job. Anywhere that has kind of a formal training program that spends a lot of time teaching you how to do really rote, repetitive stuff, but also where you get to learn kind of a lot about a lot of different things. I think those are all great training grounds. Being early at a startup and having a whole bunch of stuff thrown at you, I think those are all great training grounds. If you're interested in venture, wait till it's more of a natural fit later on. I truly believe that it should not be an early career opportunity. The same way that I tell people that you shouldn't go into PE as an early career opportunity. You should go do investment banking for a few years first, or consulting, or go to business school, or whatever. But like direct to PE, no way. I don't think that you're equipped to be an investor until you have more years of professional experience or a significant amount of life experience under your belt.
And you've been like an investment banker, so you can kind of speak to this. Um, when you transitioned into venture capital right now, because investment banking is more of numbers per se, and then now venture capital is more people. So how was that transition for you? Was it like very transferable, or what was the qualities, or was it just like the long hours of grind? Was that the only thing that was transferable, or was there something else?
So I think the most transferable thing, honestly, was the learning the recruiting process and just understanding how how that system works and how to get in and how to break in and do all of those things. I think that was probably the biggest thing. But there's also a lot of non-quantitative elements of investment banking, like putting together decks, understanding the industries and that kind of high level stuff. I think part of it is also kind of just the long hours and the work ethic. I will say, I think the biggest thing was I really admired the managing director that I worked for. I think that he had a phenomenal um, understanding of, and that's the reason why he's so successful, is so successful, is one of the top bankers in his category on the street. Like, he understands his clients and he's developed very, very good relationships. And I think one of the things that a lot of junior bankers really miss is you are in the client service business. even though you're not interacting with the client every single day, you're helping your managing director build their franchise, maintain their book of business, and really grow their practice. And when I saw that, and I had that real like unlock by getting the privilege of seeing him work his magic, it really was something else. It was just seeing how he managed conversations at the highest levels with CEOs, managed them being vulnerable, managed them kind of saying like, oh, man, I'm not really too sure about this. That really gave me an understanding of what it means to provide optimal client service, and I believe that that is something that we really bring. We believe it's a privilege to manage LPs' money. We believe it's a privilege to work with founders. We believe it's a privilege to get access to different investors' ecosystems. And by we don't have we're a low ego organization. We're not entitled at all. And yeah, we believe everything is a real privilege, and we treat it with the utmost respect.
And that's the amazing thing about you guys at Daring is that you guys are really, come from unconventional paths and really just want to support these founders that wouldn't have gotten support otherwise from the VCs. So I know you talked a bit about how to break into VC. For our viewers who is walking unconventional paths right now, who needs an actionable plan to implement right away, what would be your recommended 6 month plan to break into VC?
Yeah. So what I would say is my recommended 6 month plan. For the first month, I would spend your entire time not even talking to anybody and just reading as much as you possibly can. Um, Read about early stage deals, read about something that's going on in an industry that you're interested in, and keep your focus solely on one thing. Don't be a hero. You don't need to learn about every single thing that is going on. Just pick one thing and try to understand it to the best of your ability. If you really want to differentiate yourself, I would highly recommend making sure that it's not just AI or defense tech or autonomous vehicle. Like, pick something interesting or unique. Like, I want to learn everything about people who are building software for general contractors, or I want to learn everything about the circular economy in fashion and retail, and focus on one little section, and then start talking to founders. I would say for the next kind of month, start talking to founders and immerse yourself in your ecosystem. Hang around, go to different events, try to get invited to different things, go to talks, go to lectures, find out where VCs hang out, where founders hang out, et cetera, and just, my grandfather had this saying, if you want to be a senator, just hang around some senators and eventually you'll become a senator. Like, it's just, I don't know, it'll be like, hey, I've seen you around a whole bunch. And next thing you know, it's just kind of like, and then you end up, getting into it. Hang around as much as you can, make friends, and most importantly, as you're starting to immerse yourself, leverage the power of saying, I don't know. I don't know is one of the most powerful things you can possibly say. If somebody says something to you, like, I just, I don't know. Like, that's a great question. I have no idea. Or I don't know what you're talking about. Could you please explain that to me? When you're at that early, everybody says fake it till you make it. I completely disagree. In those early stages, weaponizing competence, right? Use your own stupidity to your advantage to foster in-depth, interesting conversations, because people who will take the time to have that conversation with you for 15 or 20 minutes, that's somebody that you should probably be keeping an eye on, because they're already invested in you. They've already taken time out of their day. Come back to them in a few weeks and be like, hey, that thing that you told me about, I looked into it. Uh, and then kind of from months three, onward, spend as much time as you can building relationships and avoiding being transactional, figuring out how you can ask or how you can add value, be quick to offer, and very, very, very slow to ask for anything in return. This is not a game that you should be like trying to speed run. This is something that you're playing this, yeah, this is a long game. It really is a long game. And just, there are so many transactional people in this industry. Do not be another one. Add value. Ask for little to nothing in return, and people will like you. And if people like you, they will start to work with you and they will hire you. Full stop.
Yeah, that is amazing. So now for a few rapid fire questions to wrap up. A few words or a sentence. Ready?
Let's do it.
What's the best book you've read recently?
Reinventing the Heartland by Nicholas Lala. It's about how he was his role in building the innovation ecosystem in Tulsa, Oklahoma. It's fantastic, and it is a great framework if you're interested in building an innovation ecosystem, in a city or even somewhere as small as on your community college campus. You can implement the tools in that book. Unbelievable read, and could not be a nicer guy.
If you could invest in any startup from the past, which one would it be?
Amazon. Uh,
Yeah, literally, I tell my friends like if you can invest in like one stock or anything, just do Amazon. In 10 years, it's gonna be like the biggest thing ever, and it's just not gonna fail. Uh, what's your favorite part of working in VC?
My favorite part of working in VC is getting to share in founders' excitement about what they're building.
Yeah. If you could time travel and give one piece of advice to yourself who was in community college, what would it be?
It's going to be all right.
That was amazing, Joe. For anyone listening who wants to learn more about you or your firm, what's the best place to reach you?
I'm on LinkedIn. It's my full name, Joseph, Joseph, Alalou, Alalou, Joseph at daringventures.vc. And my Substack is outofscope.xyz.
Yeah, and I'm definitely gonna put his details in the description. Definitely check out his Substack. It's really, really awesome, especially for like the unconventional founders and startup people. If you're in the startup space, you should definitely check it out. Out of everyone you know, who are two amazing VCs that you recommend as future guests to our podcast?
That's a great question. And it's always a question that I tell people they should end every call with, who is somebody else that I should speak to. Um, I would definitely recommend the associate on our team, Lauren Hinton. I think that she has her own unique background, and I think that she's just a phenomenal, not just a phenomenal investor, but also just a phenomenal person. And another investor I'd recommend is a friend of mine here from New York. His name's Laurent Span. He's the GP of Span Ventures, and he has taken a real community building approach to building up his firm. And he is one of the most well-networked guys I have ever met in my life. And I could not believe that he had built the network that he built in 1 year. I was shocked. I thought he did it in 5.
Yeah, sounds like amazing people. And I'll definitely reach out to them. Thank you again. And thanks for everyone who's listening. Comment and question you want to hear from our next guest. If you enjoyed this episode, make sure to press the subscribe button, like, and share with someone who's interested in getting into venture. We'll see you next time on Break into VC.